Private lenders come from relationships, but you knew that. What you may not know is what we'll cover in this video, so stay tuned for this live motivated seller turned private lender video. And be sure to stick around to the end for when I ask the question. So now that you have a clear picture of the process and you understand what private money lending is, are you ready to fund on a deal right now or in the near future? Because his answer and our response will surprise you. With that, I'm Christian Weatherspoon. We're real estate investing made easy, but for this video, you can call us private money lending made easy. So it's time to make it easy.
How's it going, Roger? I'm Chris. This is actually one of my colleagues, Christian Weatherspoon. He's our director of finance.
Hey, how's it going, Roger?
It's going well. Clicking off the to-do list, so that's good.
The briefing that I got was that you had caught wind of kind of some of the creative financing strategies that we do to get sellers more money. And part of how we do that is, I just got off the phone with my friend of 30 plus years, and he's an Air Force pilot, and he's got a lot of money, but it's sitting in a bank losing value. So he's lending in our business so that we don't use our own capital, so that we can use our liquid capital to grow our team, bless those families we work with, let them provide food on the table for their families. And we just keep this going and keep people employed. That's what we do. And it sounded like you had some interest in that as well. So I'm here to help with any questions, explaining the process, filling in any of the gaps. So I'd love just for you to catch me up, let me know what kind of interest you have in it. I will keep this meeting tight to respect your time and ours, but I also want to make it impactful. So I'll close my mouth and open up my ears and listen to where you're at and what you're looking for.
I'm a small-time real estate investor. I've got a little over 100 units. Most of them are in an apartment building that we own with others. As Chris mentioned, I'm selling a duplex, so I'll be under 100 units. I was that close. I was at 101 units, and now I'll be under. So Chris mentioned you guys are closing on some deals, and maybe I'd want to take a look at them.
I've been a coach, just some background on me, a trainer on real estate, creative real estate for over a decade. And I always got to say, people who are doing what you're doing, you're a real estate investor. You're just doing it in the capacity you want. Whether you have 100 units or 10,000 units, whether you're flipping properties or whatever, it's nice. You're doing a real estate investing the way that you want to do it. And this is another side to it, the lending opportunities, of course. How familiar are you with private money lending and what the process looks like?
I have taken private money, but I've never been the private money lender. And so I've taken private money just from friends and family kind of thing. I have no idea what it means to you guys.
It's likely very similar to what it means to you. So I'm curious, when you've had that experience before, first off, was it positive or negative when you borrowed money as the investor from another lender?
It was positive as far as I know. I haven't gotten any complaints from my lenders. Actually, I've been told not to pay them back.
Because they want the money to keep working for them?
Yes.
Yeah, we get that a lot. I feel you. So what is the percentages and notes that you're usually structuring these deals with?
I only have one right now, and that's with my mom. That's $50,000 interest only for 5% interest. It is supposed to go to normal payments here at the end of the year, although it was supposed to go to an amortizing loan at the end of this year. And my mom's in a bind, so I'm going to be paying more than an amortized loan.
If I got my parents on board, that would be the day. That would be really cool. So far, just friends and other family members, but not mom and dad yet. And how long have you been doing this with your mom's money? And is there anyone else? Because my understanding right now is that she's the only lender so far.
She's the only current lender. I think I've done it a couple of times before that was short-term kind of thing. This was a 5-year note that's coming due in December. Honestly, I had thought she was just going to renew it because she's the one who told me, don't pay me back. Because multiple times over the last 5 years, I was like, I got 50 grand sitting here doing nothing. I'd happily pay you back. She said, no, that's the only thing I got that's making money.
How do you feel like that might affect you and your ability to lend on other transactions with real estate?
It won't much.
Really good. I mean, that's great for you as an investor, and also great for your mom, putting her money to work for her instead of just sitting in the bank. So you obviously understand the principle of private money lending and what it is, to the point that banks are already doing this. It's $1 trillion industry for the banks. Even if you weren't doing it, You're already doing it without knowing it, because the banks, when you have a deposit account, they're taking that money and they're lending it to people and businesses, earning an interest, and then slap you in the face with a 0.02% interest rate on your money in a checking or savings account. And it doesn't keep up with inflation. So it's just losing value day over day.
And you got to pay tax on that interest.
There is. Yes, there is. It would be the Schedule C, just normal income. It's better than nothing. So it depends on your interest rate and what you're doing. But I know it seems like you understand the value and the benefit of, instead of it just sitting in the bank, putting it to work in a property. So my question for you would be, so I understand here you're coming up on a few closings, one in particular on the duplex that you're looking to close on and have a chunk. What does that chunk look like that you would, in a perfect world, say, hey, I trust this guy, Christian. I like him. He knows what he's doing. I know that he is going to put my money to work for me. I want this amount to be put to work. What is the perfect scenario in your mind right now?
Oh, I don't know that I have a perfect scenario. I do have a couple of properties for sale when everything comes to pass. And then I've got a cabin that I've got for sale, and then that house in Nebraska. My intent had been to go and take this money, invest it in syndications. So I got into his last 2 syndications that he's publicized and was getting ready to get into his third. In fact, I did the soft commitment since I started investing. It should be coming out any day now. My intent was, so this 50, it's $100,000 buy-in. This one, since my other 2 deals haven't closed yet, I was gonna take $45,000 out of my HELOC, as well as this $55,000, and put it down, sign in for the next one. And hopefully by the time he gets his next one done, hopefully my cabin is sold, or the property in Nebraska. Those both have a lot more equity in them.
Would it be helpful if I just kind of told you what we're thinking and what we're looking for?
Yep.
So we're not looking for, in this capacity as it pertains to residential real estate, anything that would require accreditation from the SEC. This is not like a Reg A investment where we need these accredited investors, which it sounds like you are, obviously, because if you're lending that kind of money, unless the regulations are different, you would be an accredited investor with that amount. Am I wrong about that?
No, I'm accredited.
For this type of opportunity, as you know, because you've been doing it with your mom and others in the past, but currently with your mom's money, we're just looking for these one-offs, right? Where we're either going to fix and flip them, or, we always have 3 exit strategies, a contingency, whether it's if we're going to wholesale a property because that makes the most sense because we partner with somebody else who is going to bring it to the finish line with the rehab, or whether we're going to wrap it, sell it to an end buyer with putting very little or nothing into it, to have small wins, not just small wins for us, but wins, as you know, keeping up with inflation to safeguard your money instead of sitting in a bank account. So anywhere from 50K, which is normally our lowest investment option, to 100K, those are really the smaller types of investments. But we also buy larger properties. They run the gambit as far as the opportunities that we have. And it's all up to, and you know this, it's all relationship based. I would want to get to know really what your goal is, and then I could point you in the direction of one of our active deals that would make more sense for you, whether it's short term and you're like, yeah, I'm not going to be investing in, maybe I'll skip the 3rd one and go to the 4th syndication deal. But in the meantime, your money's sitting in the bank losing value, so let's put it to work. So maybe that's 6 months. Maybe that's 12 months. Let's leverage that and get it working for you in the meantime. So we're flexible with all of that. The friend I told you about that I just got off the phone with, he said, I want to do 50K on a 12-month note, but I also want 25K on a 6-month note. And I said, okay, well, we have opportunities that fit that criteria, so we can make that happen. We pay like interest, very similar to what you're, providing for your mother. Sometimes it varies, but I'm curious, what are you looking for in terms of, if you're putting your money to work, an interest rate that you'd like to realize?
I guess right now my bar is set. I don't know. I keep thinking whether I should be more of an active investor or a passive investor. The last 3 years of my life have been really crazy. So it's been a wild ride. And every time I try to ramp up my active investing, one of them relapses. I'll get about a week or 2 into, a massive mail campaign or something of the sort. Then my world goes to crap. And I was like, at least I'm still doing something.
Man, I'm sorry to hear about that. That's tough, and we all understand. We all know what that's like. But it sounds like you're in a place where that is my reality. And then there's also other opportunities that can make my reality suck a little less when it comes to financial. What returns are you getting from those syndication deals you're investing in?
So right now I've gotten zero. I want to be clear on that. I first invested in a syndication in June or July, and he predicted that, if everything goes average, you'll get an 8% cash on cash return starting 6 months into the deal. So December would be the earliest that I would expect to get anything. And it probably will take a little longer than that, I think. So it's an 8% return. And then in 3 to 5 years, he will return 120%, cumulative 120% of your initial investment. And then you stay in the deal and you continue to get about an 8% return, compounding, because he raises rents every year. And so it goes up every year. But honestly, it's pretty good. I'm not sure why he calls it an 8%. I think a normal syndicator would call it not an 8% return, but would call it a 40%, 20 to 40%, depending on whether it's 3 to 5 years that he refinances and takes the money out. You get a 20 to 40% cash on cash return by year 5, and then we'll drop you down to an 8% return, but you'll have all your money back up.
How educated are you when it comes to structuring a syndication, either as an operator or otherwise?
Oh, I have certainly never structured one. I've read through 3, maybe 4 syndication operating memorandums or whatever.
There's a difference to the opportunity that we're talking about with the private money lending in this. You would just be a lender, both commonly and legally. In fact, more of an adversary. So there's common enterprise with that type of investment. Of course, that is regulated by the SEC. That's what they define it as, common enterprise. So you're basically business partners. And all that said, we're also not opposed to doing joint ventures with people who are lenders, but that comes later after a track record, usually. So, if, and I understand you don't want, maybe you don't, I don't know, I'm not going to speak for you, but from the story you told me about every time that I start to actively pursue real estate investment with mail campaigns, it creates, whether it's the universe or whatever's happening, something that's not good. I don't know if that's an interest of yours in the future, but just know that you're a smart guy. I can tell that you know what the heck you're doing, which is awesome. And even if you didn't know what you were doing, I'm happy to help answer any questions or fill any gaps. But there is always like, hey, let's squat up. Let's do this stuff together on my mind for the future, because we think long term, regardless of what the market's doing, and we know where it's going, right?
So far.
But all that said, if this is something that is interesting to you at an 8%, I'd be willing to entertain something pretty close to that for private funds, just so you know, we're totally fine with that. A lot of people that teach in this space, that provide opportunities in this space as well for other private money lenders in their own deals, are paying 7.5% to 10%. So you should know that for active.
Okay, so say that one more time.
A lot of people like us are paying, depending on the relationship, depending on the deal, depending on the position, and depending on the nature of the transaction itself, 7 to 10%.
Okay.
And what we do is we have a system, because systems work as long as you work them, and we continue to work it. We always like to start off at 7% in general. If we're talking about working together in the capacity as you're a lender on a transaction for a deal that we have, we're not going to scoff at 7%. We think that's great. So if you're looking for those 8% returns that is looking for, and yet you're not getting paid for 6 months, and then there's a great upside on the back, right? Which is awesome because you're an equity partner. We're just looking for, in this capacity, a lender to get a higher return than you normally would pretty quickly, right? One and done, maybe a 12-month note. We're fine too, because we buy rentals, with putting someone's money to work for a longer period of time. And we structure those not very differently, but slightly differently when those come up. But it would all be up to your risk threshold, what it makes sense for in the moment for you. It's hard to have a crystal ball, but like your mom's situation, she told you, don't pay me back, keep my money going. And has that happened to us? Yes, it's happened. And what do we do in that scenario? Again, back to the system. We have systems. Does that all make sense?
You're a lender, so you're not getting depreciation or appreciation.
In that capacity, right. So you would just be saying, here's my $1. go get me more dollars. And you can take 50,000 of them and say, all 50,000 of you go work to get more. Squat up. Just taking your money to put your money to work, as you know.
So what kind of, there's got to be a better way to say it, but what kind of assurances are there?
That's a great way to say it, by the way. Perfect. Yeah. So protections is usually the way I position that. And the protections you have are, we do two things. The lower price points, oftentimes it's a mobile home. And especially where we're talking about investing, where we mainly invest, we invest all over the country. But like San Diego, some of those price points are going to be a lot lower. But the protections are this. If it's a mobile home, then it's an encumbrance. But if it's what we traditionally do, physical, real property, everything appurtenant that conveys, it's a deed of trust. It's a promissory note secured by a deed of trust with you in, depending on, like I said, the investment number, either in first position or second position. If we have a $100,000 purchase and you come to the table with $100,000, what position are you getting?
First.
There's that promissory note secured by a deed of trust in first position. But also, as we are doing work on the property, we always get vacant dwellers and builder's risk insurance. The loss payee on that insurance policy, 100% is that in first position on the debt, which would be you, meaning you get paid first.
I'm sorry, I missed vacant dwellers, and what was the other type of insurance?
Builder's risk.
Is that for when you're building, or is there?
Any remodel. And by remodel, I mean remodel. If we're just painting and we're putting carpet or different flooring in, that's in some states not needed. In that case, you wouldn't get it because there's, right? But well, one of them, builder's risk. Vacant dwelling, we still get that insurance and you're still loss payee. Why? Because we may not have an accident because we're not doing a lot of remodeling. But what if there's an act of God, an earthquake happens, a flood happens, a hurricane happens, the house burns down? Where's your investment? It just got burnt to the ground, but the insurance company naming you as the first loss payee pays you back that investment and any realized interest at that moment, whenever it happens. And then if there's anything left on the table for us, we're always the last to get paid. There is another protection, actually, and this is only applicable when it comes to long-term buy and holds. As a note holder, we make it easier for you so that you wouldn't necessarily have to go through, let's say I get abducted by aliens and Chris decides he wants to become an astronaut and he relocates to the moon with whatever the name of the company is, right? That's going to the moon. And then we're like, hey, peace out. Good luck. Well, foreclosing sucks. Like, it's a long process. It could cost you a lot of money. So what we do in a lot of cases is we'll give you the ability to exercise a deed in lieu of foreclosure so that you don't have to worry about it on the long-term buy and holds. And, if that's an interest to you, we'll talk about what that actually looks like in that moment. Now, there's another protection too. So, but wait, there's more. Aside from selling sham wows, the other protection is you're going to evaluate every single deal. So like, you could trust me. Literally, some of my clients tell me, I trust you implicitly, just do whatever you want. But I say, no. You're going to look at this and I'm going to teach you how to evaluate a deal. Now you, Roger, probably already know how to evaluate a deal, but I would still want to share with you how I do it so that you know what we're seeing as our opinion of value for the current price, but more importantly for your protection, for the repair costs, and then for the ARV, what it's going to sell for when it's fixed up. So we'll share with you our due diligence and you get to determine, hey, yeah, this looks like a good opportunity. I would do this myself if I was actively investing. And frankly, one common question that I get that you didn't ask, and you probably won't ask it because you're an investor yourself, is, wow, you're making $200,000 on this property. How come I don't get any of that? Frankly, that's your protection too. That's another way that you're protected. You make money when you buy as an investor, as you know. But if we're making a lot of money on the back end, technically, right? That's our potential net profit. That's even more protection. That means that somebody like me who's been doing this for over a decade, flipping houses by myself, managing crews, and now with my partner, Chris, I would have to make a whole lot of rookie mistakes. The end of the world would also have to happen at the same time, which in that case, you probably wouldn't be worried about the investment, for us to lose the $200,000 and then the principal and then your interest. So the more profit we make, the more protected you are as well. I've been chatting for like 30 minutes here. I've only gotten a little bit out of you because, you know, I know this is a lot, but you seem to be familiar with a lot of it. Do you have any other questions related to this type of opportunity?
Not that I can think of at the moment. Obviously, I know how to reach out to Chris.
Yeah. Is there anything that I should be asking you that I haven't?
I'm almost surprised you haven't said, well, when can we get your first check? But I don't think that's the way Chris works either. So I'm not really that surprised.
Fair enough.
You go for the hard close.
Yeah, I'm glad that you brought that up because the truth is this is going to be a relationship, right? Like I want you to know, like, and trust me. I want to know, like, and trust you. I've had lenders, not that you would do this, especially if it's not in your backyard, who, when I first started this, I was like, cool. Like, I don't know you that well. I didn't vet you. And then they tried to go to the property and tell my contractors what to do. And they're like, well, I'm the lender on this. And I'm like, I have a scope of work. It's very detailed. It calls down to every line item. I have a payment schedule. I follow the critical path method. We have payment schedules and benchmarks and milestones. Like I manage these contractors in we have a conditional lien waiver. Do not tell them what to do. That's my job as I manage the process of the project to protect your investment. And there were so many change orders that were created because this lender was also a realtor. And they're like, oh, well, this is going to sell better. This is going to sell better. So do this instead. When I caught wind of it, I had to call my lender out and say, I'm never lending. I'm never taking your money again. I have this amount of money over here. I'm liquid. Look at my bank account. I'm providing this as an opportunity for you. And not that you would do this. Okay. I'm sure you wouldn't. That's just one example of why it's important that we get to know each other, notwithstanding the fact that according to SEC regulations, doing this has to come with a previous relationship or a pre-established relationship. So it's not like we're not marketing for this, obviously. Chris has known you in the capacity that you guys were speaking about the sale of your property. So that's okay. And I have no scruples about it. I just want you to know that we're seasoned investors that aren't clamoring for dollars because we have plenty of it. We just really enjoy working with other like-minded individuals who are looking to put their money to work for them in the meantime, whatever that meantime looks like, whether that means the next 50 years or whether it means, one 12-month note, one time. I had a great experience, but now I'm going to go invest my money with.
And also some of our best opportunities have come on the heels of relationships like this. It's like investors like yourself who are active in investing, whether it's passively or actively. When we develop a relationship, then, sometimes people like yourself are like, hey, I came across this opportunity. What do you guys think about it? And, those get presented to us and sometimes we can come aboard on those types of deals as well. So it's just a great way to network, build relationships. And at the end of the day, as much as this is a property business, it's more so a people business. So that's really what it comes down to.
What is the shortest term you guys do?
I did mention 6 months. That's very few and far between. And the reason for that is just because of flexibility. But we'll sign a 12-month note even knowing that we can get in and out in 6 because we want to anticipate issues, problems. And that's why we buy low, right? To anticipate issues and problems with the market changing, because even politics affects that, right? But we have elections coming up. What the heck's going to happen? I have no idea, right? So if we were to say, okay, cool, let's get a property right now and let's get my money going, depending on where it is that going to affect it? I don't know. Last summer, there were riots and all sorts of stuff, and it was all politically motivated and all this other stuff. Businesses burned down, houses burned down. So the answer is, and that's more of an extreme example, the answer is we'll do a 12-month note. If there is a need to do it less than that, we talked about that 90 days. If we project it 6 months, you could probably be pretty sure that after a decade of doing this, it's going to be 6 months or less. We'll account for that in the evaluation. So when you see what I call an opportunity packet that has the comps and it has everything listed and our repair number and an abbreviated scope of work, you'll be able to see what we're planning on doing to the property. And our goal is always to be on pace to do at least $10,000 worth of work a week. So if it's a $50,000 job, how long should it take? 5 weeks. If it's going to take 5 weeks and it's a $50,000 job, I always give my contractors, because they'll tell me, hey, it'll take 5 weeks. I say, cool, I'll give you 7. Because we use an independent contractor agreement that when we're putting our contractors to work, we give them a penalty for anything that goes beyond what the payment schedule says. Notwithstanding change orders or things that came up like that we just didn't anticipate, they're not penalized for that. But we want to be flexible because we also pay them extra for coming in early and finishing the job. So it's all about incentivizing not only our lenders, not only ourselves and our team, but our contractors and everybody involved. I know that was a long-winded answer, but it was on purpose because there's no set in stone other than, hey, our standard is 12 months, but deal per deal, you'll see as you analyze them, this one's projected to take 3 months. Why am I signing a 12-month note, right? And that's the reason behind why we structure 12 months note.
And then it also depends on the type of transaction we're doing. That context is around more of a fix and flip type of transaction. We're also doing buy and holds. And so oftentimes for the entry fee, the down money, we'll do a 12 or 24 month. A lot of times we'll even do a 24-month interest only with an option to extend.
Yeah, makes sense.
That's the behind the scenes of how we work within our business as it pertains to private money, but also, hey, how we manage projects, right? So that's part of the security of your investment inside of the way that we use a strict system to flip properties if we're flipping them at all or turn them around. But what I would love to do is just get it on the calendar a little bit later, but also open the lines of communication. If you're interested in lending on an opportunity that's coming up in the future, now or in the future, just let me know. Ultimately, you're not going to hurt my feelings. And if you say, hey, I want to get to know you guys a little bit more, that's music to my ears too. Yes is music to my ears, and not right now, as in that's just whatever situation you're in is music to my ears. So does this sound like an opportunity that you'd like to move forward with now or in the near future on an opportunity?
Yes, with caveats. How about that?
I like it.
Did you say caviar? I like that.
There is supposed to be sending out a new deal here in the next 2, and I'm pretty well already committed to that. I think I already gave him a soft commitment. But when my cabin sells or when my property in Nebraska sells, how long does it take to start receiving that 8%?
Yeah, we use a third party that's going to handle all the transfers of funds. So ultimately, when we close, it's much like a traditional mortgage, right? You get it the month you close, it's somewhere around 28 to 30 days later, then it just starts turning.
Okay.
And it also depends on the transaction as well. So sometimes with fix and flips, we'll do interest paid in arrears. So, the money will just be parked. And then at the end of that term, whatever it is, you'll get your principal and your interest all in one lump sum. And sometimes we'll do that with our buy and hold strategies as well. And then oftentimes we're doing interest only payments for buy and holds and even sometimes fix and flips as well. So it all depends deal per deal. Sometimes a deal, especially for a buy and hold, might only make sense in the first, 6 to 12 months if it is paid in arrears, just based on the limitation on cash flow, which goes to another point is we're not only buying simply for cash flow, right? Like you and I were talking about that, about your Colorado property. And like, there's times where we might buy a property that doesn't cash flow, but we can get good depreciation, or we can create a situation where, hey, it's going to cash flow in 6 or 12 months once the lease renews. And sometimes in those scenarios, we've even structured deals with sellers where, they're seller financing to us and we have a monthly payment to them, and we'll do a graduated payment scale with them where for the first 12 months, hey, it's not going to cash flow for us. And if we make a payment to you each month, it's going to negative cash flow. So what if we did no payments for the first 12 months? So we're at least breaking even. And then after we can raise the rents, then we'll adjust and start making payments to the seller. So we come up with all types of creative strategies to make deals work. But yeah, so it all just depends on the deal.
Because we're not trying to lowball people. You know the game. So it sounds like ultimately the why not at this exact moment in time would be because you've made a commitment to somebody else. And I got to tell you, I appreciate that. That right there speaks to like, actually, I want you as a lender in our business, because if you make a commitment, and even if it's a soft commitment, then we can rely on that transaction not falling apart as a result of, our relationship. So I like that. I appreciate that. But we'll keep in touch. But I'm excited. Let's just keep in touch. I know Chris has your phone number. I'll get it from him too, and I'll bug you every once in a while. How frequently do you want me to bug you?
I don't know. Probably not more than once a month.
Okay.
Sound
That's
good?
fair. That's
Okay.
fair. Okay. Let's keep in touch then. It was a pleasure meeting you, Roger.
It was very nice to meet you.
Awesome.
Yeah, good to meet you in per Zoom, Roger.
You were waiting to make that joke.
I've been waiting to make that. I'm working on my dad jokes. So, I got my dad shirt, the roast beef, the cow sitting in the sun, and I'm working on dad jokes.
I like it.
So
We're 50% professional, right?
That's good.
Yeah,
And you're wearing in your underwear underneath.
exactly.
Yes.
Business on top. It's just like
party in the
relaxing.
bottom.
Yep, relaxing on the bottom. So
That's right.
We have business branded thongs. So
Oh my god. Why did you tell him that intimate detail?
Hey, since we're sharing,
Yeah.
So embarrassed. Awesome.
Good.
Well, you take care. It was great meeting you, as I said, and we'll keep in touch. We'll only bug you every month or so, but we'll look forward to doing some business with you in the future.
All right. Sounds good.
If we have a virtue, the virtue is patience. That's what I've learned. So there's no rush here. Appreciate you.
Sounds good. Well, thank you very much.
You too. Bye. Hey, it is critical that you know this. Every time you're speaking to a motivated seller, whether you're the buyer or someone else is, most sellers in many cases don't need all of the money at once. There are cases where they do, but even so, I encourage you, give a private money lender pitch to every seller that you're speaking with. And if you're wondering, how do I do that? Well, check out this next video where you'll learn everything that you need to know about pitching private money lending to fund your real estate deals. So we'll see you in that video right there.